Alright, I'm currently at Bank Negara Malaysia for Sasana Symposium 2024 or SS 2024, which is organized by Bank Negara Malaysia itself. And this is an annual conference which is held for 2 days, 12 and 13 June 2024. But to know better on this and what's inside or what's store for listeners, we have right now the right authority to speak on this, which is Sri Abdul Wahid Omar, the chairman of Bursa Malaysia himself. I would like to welcome Tan Sri. Thank you so much for taking the time to speak with us, of course, on AWANI. And perhaps we could start with perhaps a little background on Sasana Symposium SS24 and what's its purpose and how is it different from previous years.
Well, I think it's a great symposium. It's very well covered and very well participated. I understand that more than 900 participants signed up, and there are many parallel sessions. So I think if you look at the areas of discussions, they are very relevant, but yet at the same time appealing to different groups of policymakers and practitioners as well. So I think it's certainly a great improvement. Thank you.
Okay, Tan Sri, looking at the global situation current right now, we've seen that the global central banks have been increasing the interest rate to combat inflation. And how has the recent tightening of monetary policies affected the liquidity and volatility of Malaysia's equity markets? And how has Bursa Malaysia been implementing to mitigate this risk and to mitigate the negative impact, especially on capital markets?
Well, thanks, Nabila. Generally, when interest rates go up, then you have typically flight to safety. Means that people tend to go for fixed income, and that happens especially when US does that. But over time, towards the end of the year, we all believe that there'll be that reduction in interest rate, loosening in the monetary policy, and that's when you will then start to see money flowing out from the developed markets more into the emerging markets and particularly into equities. And in fact, we have seen some outflows already gradually into the Malaysian market. And in January and February, for example, we had significant inflows. But then again, as the market rose, then some of these monies, they took profit and they went out in March and April. And in the month of May, they came back. Early part of June, they were out, and now they are back again. So I think overall, it's been positive, I would say, yeah.
And looking at the current situation of ringgit right now, it has been under pressure, especially due to external factors such as geopolitical tensions. We have fluctuating commodity prices and economic slowdowns. So given that, what are Bursa Malaysia's views on the future of stability and strength of a ringgit? And also, how is it going to influence the foreign investors' confidence in Malaysia equities and also bonds with the capital markets?
Well, there are two parts. So one is very much situational in nature. When there's interest rate differential, so naturally when interest rate is actually high, then it strengthens the currency, not just against Malaysian ringgit, but against all the other currencies too. But later, as they reduce the interest rates, then you can see, and you will see, US dollars weakening relative against other currencies, and that's when you will see ringgit appreciating. So that's actually situational, but I think we should also be looking at the long-term structural aspects of it. And what I mean by that is actually, if you look at Malaysia, since the Asian financial crisis 1998, we've been having 25 successive years of trade surpluses amounting to 2.7 trillion ringgit. Now, if you take into account our current account surplus in our balance of payments, again, over 25 years, 1.5 trillion ringgit. Our economy, on average, has been growing by 4.5% over the past 25 years. Now, any economy with those kind of fundamentals, typically the currency would be going up. Unfortunately, in our case, after the ringgit was depegged in 2005, it did strengthen to 3.3, 3.2 level, but it has since weakened to the 4.7 level now. Now, you will have to ask, why is that the case? Well, in my view, is that we're not really reaping the benefits or the dividends of the trade surpluses and current account surpluses because many exporters are not converting their export proceeds into ringgit. I think in recent times you're looking at probably 60 to 70%. And when they don't convert their export proceeds into ringgit, so you're not creating that natural demand for ringgit. So of course, recently Bank Negara has been working and encouraging exporters to convert their export proceeds and encouraging our GLICs and other investors to bring back their profits from abroad, and that has helped strengthen the ringgit. But I do think that in the longer term, with the strong fundamentals we have, if we complement it with a positive policy to encourage exporters to convert their export proceeds into ringgit, I think you will see a continued strengthening of the ringgit.
And definitely the local situation of economic has been doing so well, but looking at a few years or recent years before, especially during the COVID-19 pandemic, we've been badly affected, but we definitely bounced back. And after that, during that situation, how has it impacted various sectors differently? And maybe you can share a little bit what are the specific sectors that you see as having the most growth potential, and what measures are being taken to support these sectors in the capital market especially?
Yeah, I think it's important to appreciate the good work undertaken previously to address the COVID pandemic, and we've seen our economy rebounded, although it slowed to 3.7% last year, but we've seen the first quarter 4.2%, and we've seen the latest IPI, the Industrial Production Index, for April, it went up by 6.1%. So it's a good indication that probably chances are the economy actually grew by about the same, about 6% in month of April. So I think you can expect the second quarter GP figures will be much stronger. Now, what's driving it? Obviously, there are numerous aspects, but if you look at within the context of the companies listed on Bursa Malaysia, we've seen this emphasis towards renewables. The National Energy Transition Roadmap, for example, that has triggered quite a lot of investments into the renewable energy space, the data centers that are coming here to Malaysia to be set up. So that has resulted in the utility sector index to actually go up by more than 40%. We've seen, of course, the property sector has been a beneficiary too, more than 30% up this year. And likewise construction sector too, again in anticipation of all the things that are coming on stream. So I think we are seeing a good overall improvement overall. In terms of the KLCI, it has increased by 11% year to date, and the good things actually is not just limited to the blue chips, right? Because the EMAS index, which is the broader market, has increased by more than that, by about 15%. So I think that's actually very encouraging, meaning that the improvement from the real economy is being translated into the capital markets, the equity markets in particular, and it's very broad-based. And with that, we have seen investors coming back. We've seen trading volume increasing by 50%. So the average daily trading value last year was 2.1 billion ringgit. So year to date is 3.2 billion ringgit. So it's more than 50% increase. So that's actually very encouraging.
But Tan Sri, at the same time, it's important to note on how the growing global emphasis on sustainable principle or investing, especially with investors increasingly seeking companies that meet environmental, social and governance or ESG principles. So how is Bursa Malaysia integrating ESG criteria into its market framework, and what initiatives are in place to encourage local companies to adopt sustainable practice that can attract global ESG adoption to attract perhaps potential investors?
Right. So we started with the FTSE for Good Bursa Malaysia Index back in December 2014. So at that point in time, we started with 24 counters, 24 companies that met the criteria. But alhamdulillah, since then, up to December 2023, we have 108 companies making up the index. So today, we'll be announcing a review for June 2024, where the number of constituents will be increased to 120. So from 24 in 2014 to 120, I think we've come a long way. But having said that, I think the idea would be to broaden it further, because we have more than 1,000 companies listed on Bursa Malaysia. So we want all companies on Bursa Malaysia to embrace sustainability. So what we have done is to compel, or rather to require all companies listed in the main market to be rated for ESG by the end of this month. And then for all the East market to be done by June next year. So that way, investors will know the rating score of for ESG of all the companies listed, and that will enable them to decide on which companies they want to invest in. And those that meet the liquidity criteria will then get into the FTSE4Good Bursa Malaysia Index. And of course, we also have the Sharia version too, meaning that these are companies that meet the ESG criteria and they are Sharia compliant. So they go into the FTSE4Good Bursa Malaysia Sharia Index.
Of course, that leads to my next question, where given Malaysia's leadership in Islamic finance that adopts the Sharia principles, what are the latest developments in this sector and how can it be developed to strengthen the broader financial landscape and also the capital markets especially?
So indeed, Malaysia is a leader in the Islamic capital markets, both the debt capital market and the equity capital market. On the equity capital market, 81% of our stocks in number, they are Sharia compliant, so it's about 2/3 in terms of market capitalization. So we truly have an end-to-end Sharia compliant trading settlement platform that we call Bursa Sharia, Bursa Malaysia I platform. So that facilitates any Sharia compliant investors to invest end-to-end without any concern. And of course, we have also developed the Bursa Suq Al-Sila, which is the commodity murabaha trading platform that facilitates Islamic liquidity management. So we are actually probably the largest in the world in that sense. And we have since also developed other products. So our Bursa Carbon Exchange, for example, to facilitate voluntary carbon market. So that's the world's first Sharia compliant carbon exchange. And most recently, another example would be Bursa Goldina, where acknowledging the interest of many Malaysians to invest in gold, we feel that the time has come for them to be given opportunity to invest in a platform that's safe, secure, efficient, and cost-effective. Because in the past, they've had to pay as much as 7% spread when they buy and sell gold. But on our platform, digital platform, it will be it's actually less than 2% for sure. And today, I think it's about 1.3, 1.4%. And with the entry of Bursa Malaysia Goldina, we have seen the other banks and other platforms reducing their spread too. I think that's been a great influence, I would say. So I'm happy that we now have, I think, some 18,000 accounts, and every day we have more than 100 accounts being opened. So again, the idea would be for Bursa Malaysia to be that marketplace for people to actually invest in. So where businesses and investors actually meet. And
Tan Sri, how do you find the response so far?
Very encouraging for the various products. Yeah.
Alright, well, that concludes the whole conversation with Tan Sri Abdul Wahid Omar, the chairman of Bursa Malaysia himself. He has shared a quite insightful discussion on capital markets, which includes strategies, initiatives, and some of the challenges that's happening in the economy right now. And again, I would like to say thank you to Tan Sri Abdul Wahid Omar. Thank you for taking the time to speak with us. And you can find this whole conversation on all of our social media platforms, and that includes astroawani.com.